Bounce Limited evaluates all its capital projects using a discounting rate of 15%. Its capital structure consists of equity share capital, retained earnings, bank term loan, and debentures. Rate of interest on bank term loan. Alright, so rate of interest on bank term loan is 1.5 times that of debentures. Remaining tenure of the debenture and bank loan is 3 years and 5 years respectively. Book value of equity, share capital, retained earnings, and bank loan are 10 lakhs, 15 lakhs, and 10 lakhs respectively. Debentures are having a book value of 15 lakhs. Currently trading at 97 per debenture. The ongoing PE ratio for the shares is 5. You are required to calculate the rate of interest on the bank loan and debentures if tax is 25%. Now, this is a sum involving weighted average cost of capital. I've already drawn the table, the basic structure for the format. We are going to fill up this table as much as possible, and then we are going to look for the missing numbers. Alright, so we have been given the sources of capital. We have equity share capital, retained earnings, right? So equity share capital, retained earnings, which you can also write as reserves and surplus, up to you, retained earnings. Then we have bank term loan and debentures. So bank term loan and debentures. As far as the amounts are concerned, we've been told that the book value of equity, capital, retained earnings, and bank loan is 10 lakh, 15 lakh, 10 lakhs. And then they've given us debentures at 15 lakhs. So 10 lakhs. Alright, we have 10 lakhs followed by 15 lakhs, followed again by 10 lakhs, and again 15 lakhs. So once we have these numbers, we can take a total. Right, so if you add them all up, we have 15 and 15, 30 plus another 20. So altogether we have 50 lakhs. And now to get weightage, we take 10 lakhs divided by 50 lakhs. Similarly, 15, 10, all of these numbers upon 50 lakhs is going to give us a proportion, or weightage. So 10 upon 50 is 1 upon 5, which is also 0.2. Please use a calculator if you're confused. We have 0.2, we have 0.3, which is 15 lakhs upon 50 lakhs. Similarly, again 0.2, 0.3. Adding these up, you're going to get 1. That's how you know you're correct till here. Now, as far as the cost is concerned, let's see if we've been given some cost directly. We need KE. Alright, so in order to solve for KE, based on the data available, they've not told us anything except for the PE ratio. Okay, so you need to keep in mind the PE ratio is nothing but the market price per share upon the earnings per share, which we have been given as 5. The cost of equity formula we'll be using is the earnings approach, earnings per share upon market price per share or net proceeds. So it's simply the reciprocal. So EPS upon MPS is as good as saying 1 upon MPS. Okay, 1 upon MPS upon EPS, which is 1 upon 5. Okay, and do the math, you're going to end up with 0.2 as your KE. Alright, so we have 0.2 as the cost of equity share capital. In the absence of any information, retained earnings at the end of the day belongs to the shareholders. So the same cost applies to retained earnings. Now, as far as bank loan is concerned, we don't have enough of data, and they've simply told us it is 1.5 times that of the debenture. What is a debenture? We don't know. So we are going to say let the debenture interest rate be X. And now we will use our formula for KD to try and isolate the value of X. Okay, so our formula for KD, and I'm going to do it on this side here. Okay, our formula for KD is I open bracket 1 minus T plus RV minus NP. Okay, that is redemption value minus net proceeds. So one more time, interest open bracket 1 minus tax plus redemption value minus net proceeds upon number of years, okay, N, and this whole thing is divided by RV plus NP, redemption value plus net proceeds upon 2. Now, we do not know what the interest is. We have actually said that it's going to be X. Okay, so I'm going to substitute this further, saying KD is equal to X open bracket 1 minus the tax rate. And we have decided that the tax rate, okay, the tax rate applicable is 25% in decimal terms. And when I say decimal terms, I mean we can take 25%, which means 25 upon 100, and we end up with 0.25. Okay, so 1 minus 0.25. But that is if we're going to be sticking to decimal. The problem over here is the RV minus NP is in rupees. Okay, so if we are going to stick to decimal, we are likely to end up with the wrong answer. So instead of staying with decimal, let's go with percentage. So instead of 1, we're going to write 100. 100 minus whatever that tax rate is. So 100 minus 25. So 100 minus 25, close bracket, plus RV. Now RV is redemption value, and if you read on top, they're saying debentures are redeemable at par, but the face value is not known. Okay, they've given us the market price as 97. So if you've got a market price of 97, then odds are your face value is going to be the next round figure, which is 100. So we're going to assume that the redemption value is 100 and the net proceeds is 97. So it's going to be 100 minus 97, RV minus NP upon number of years. And somewhere in the question, they had told us that the remaining tenure of the debenture is 3 years. Okay, so it's going to be upon 3 divided by 3. And the rest of the formula we already know it follows. We have RV plus NP upon 2. And now we simply solve. Okay, so we get KD is equal to 100 minus 25 is going to give you 75. 75 into what's inside is going to give you 75x. Similarly, 100 minus 97 is going to give you 3. 3 upon 3 gives you 1. So it's going to be 75x plus 1. Okay, simply solve this on your calculator using BODMAS. So 100 minus 97 is 3. 3 upon 3 is 1. 100 plus 97, I'm going to do this on the calculator and then directly divide it by 2. Okay, so I'm starting with 100 plus 97, which gives me this number, divided by 2, which gives me 98.5. Okay, so we end up with 98.5. Now, going forward, we've got ourselves 75x plus 1 upon 98.5, and that's as good as it gets as far as our debenture cost is concerned. So we're going to put this number directly in just like that, 75x plus 1 upon 98.5. Now, as far as our bank term loan is concerned, we've been told that the bank term loan, okay, the rate of interest on the bank term loan is 1.5 times that of the debenture. Okay, so if the debenture is X, the bank term loan is going to be 1.5 times that figure. And we can take it a step further because the cost in the WACC table is post-tax. So it's going to be 1 minus T. Alright, so 1.5x, and then we can open bracket and again 100 minus 25. Okay, and of course both of these are percent. And unlike in the case of our debentures where we had a redemption value and net proceeds and we had to stick to percentages, over here we can very well convert it to decimal. So 1.5x is 1 minus 0.25. So 1.5x into 0.75. Okay, and I'm going to do that on the calculator. So we have 1.5 multiplied by 0.75. Okay, so 1.125. So our KD, remember this is our formula for KD. KD, where there is no worry about redemption value and net proceeds, we can simply use the irredeemable formula. Even if you use the other formula, you're going to come up with the same numbers. Now, my final KD is 1.125x. Okay, and I can add that here, 1.125x. Now, we are done with most of the sum. We multiply weight into cost. Okay, so it's everything over here into everything there. 0.2 into 0.2 gives me 0.04. Similarly, this is 0.06. For the next one, we're going to have to be a little careful. So sticking to the calculator, we have 0.2 multiplied by 1.125, which gives me 0.225. But remember, there's an x. So 0.225x. Similarly, for the next one, this 0.3 is going to multiply with everyone in the numerator. Okay, so similar fountain method in algebra, 0.3 into 75. 0.3 into 75 gives me 22.5x. Okay, so 22.5x plus 0.3 into 1. Okay, 0.3 into 1, which will give you 0.3, and again upon 98.5. Now, you need to remember in our WACC calculations, the sum of the product column, adding all these four numbers would give you WACC over here. But WACC is already known to us. If you read the question, the first sentence itself tells us that the WACC is 15%. Okay, so WACC is equal to 15%, which is equal to the total of all these four. And in that way, we are going to solve for x. Alright, so going forward, we have 15%. Okay, 15% is equal to 0.04 plus 0.06 plus 0.225x plus 22.5x plus 0.3 upon 98.5. Okay, and now I'm going to begin by converting this into decimal. Okay, so 15% is as good as saying 0.15. I'm then going to go ahead and add all the decimals on the right hand side. So we have with us 0.04, 0.06, and we adding them up, we get 0.1. Alright, so 0.1 plus 0.225x plus again whatever we have here with the denominator. Okay, plus 0.3, the whole thing upon 98.5. Now, what we are going to do is everybody without a denominator is going to be sent on to the left hand side. So we are going to end up with 0.15 minus 0.1. And remember, there are unlimited zeros on the right hand side. So I'm just going to write it like this so it's easier for us to understand. Minus 0.225x is equal to 22.5x plus 0.3 upon 98.5. Now simplifying this further, we can end up with 0.05 minus 0.225x is equal to 22.5x plus 0.3 upon 98.5. Now this 98.5 that you see over here is division. If it goes that side, it becomes multiplication. So I can multiply 98.5 into both of those numbers. 98.5 open bracket 0.05 minus 0.225x is equal to 22.5x plus 0.3. Now we go ahead and multiply inwards. So it's going to be 98.5 into 0.05 and 98.5 into 0.225. Right, so we have 98.5 into 0.05, which gives me 4.925. Avoid rounding up, otherwise you may not get the exact answer. 4.925 minus 98.5 into 0.225, 22.1625x. 22.1625x is equal to 22.5x plus 0.3. Numbers on one side and alphabets on the other. This is negative, goes that side, it becomes positive. This is positive, goes the other side, it becomes negative. So we have 4.925 minus 0.3 is equal to 22.5x plus 22.1625x. Okay, and going forward, we will take 4.925 minus 0.3. Okay, so we have 4.625, which is equal to 22.5 plus 22.1625, which is equal to, okay, and I'm going to do this one more time, 22.5 plus 22.1625. Okay, so 44.6625x. 44.6625x. Now, x is going to be finally equal to 4.625 divided by, remember this is multiplication, when that side it became division. I'm just turning it around. X is equal to 4.625 upon 44.6625, which gives me 4.625 upon 44.6625. Okay, and expanding the calculator, we have our answer as 10.355%. Okay, and I'm going to multiply that into 100. So 10.355, which I'm going to round up as 10.36%. Okay, so we have 10.36%. Therefore, the interest on debentures, is 10.36%. And similarly, interest on bank loan will be 1.5 times this number. Interest on bank loan. Okay, bank loan is 10.36 into 1.5. So that is going to give me 10.36 into 1.5. Okay, 15.54%. 15.54%. I hope you'll have understood this. In case you'll have any doubts, feel free to mention it in the comments. I will reply. Share this video with your friends. Please like and subscribe. Thank you.